we took one contract at 21.70, which is a different strike price. Once again, we saved $8,926 on that one contract print. Last one, and we did several of these, and we have several trades live today right now, and that was closing price of 124.06. Yes, there is risk. Yes, Nasdaq 100 in the short term. We got calendar earnings starting. Today is 1/9 of 2012, and I can tell you that Brian Plain did a great job. He created a 3480. That is the markdown, and we have done several of them today on one contract. Is there still risk? Yeah. Look, $124 is where people owned them. That was the last closing print. Yeah, there's risk, but at least we got that risk here at 34.80. Do we still have risk? Yeah, but we're the lowest entry ever since this contract has been open across the board, and it's been our experience that calendar 2012 is upon us, and we're looking for these kind of markdown bids. They do not come around ever. And very seldom, we did one last time on the 2140 call in 2011. Contracts were like $350. We ended up getting them at $55, and then they took the 2140 call and they marked them back up $200 a contract, back to their levels for the call side of the bull rally. What we're doing is that once we make our exchange entry, saving that much money on all of these contracts for March, is that now we can look at the call side because we're protected with the first discount entry to the marketplace, meaning $89 below the market, we have our protection. So now if we want to buy calls, and let's say they gap it down and these go way up in value, yeah, we'd lose a little money on the call, but we could get out, and that's called getting on the discount price on the first entry. So now that MMTs can look back at what the upside calls look like on the Nasdaq 100, because they've got well over 60 days in this. This will take us through the calendar earnings season that's upon us with Alcoa today. And not only that on the pullbacks when they go up in value, we can buy calls and ring the cash register on those. And so now the MMTs will go into a full load of the put side of the market at the discounted price. When this side of the market here is working for us, and across the board, $89 markdown, $8,900 of risk. We created the market as a market maker. I do this all the time. And I like to create that low print because the people that were in them and trade them, and big money trades these things in here, $160, $200. We just did one earlier where we saved $300 markdown in an entry. And that was on a contract that we just did a few minutes ago. We did quite a few of them. Here's one that we just saved on a 2190. They're 38 by 3920. We created the print right here at 3550, and they were not even going down. But look how the ask goes higher. 3550 is the entry, 38 by 3920. And when we do get a really good pullback intraday and this Nasdaq 100, these things are going to the moon. And that was $143, and we did that, and we did it here. We did it live on 1/9 of 2011 because we did. Not only did we do that one, we did this one here in March. We just did a 2160 also in March. Right here. Because it's lower between the strike price, the ask will take a little bit longer, but we created the bid of 30.50, and they're walking with 32.40, 33.50. You don't have to have much move. We got the low print, saved $105 in that one. We also bought this one. Created that print. There's that 2190. Created that print. We showed the 2160. Here's the 2170 we just showed. We created all these big savings in these entries, and they will leverage them up in price. Here's the one that we really did was, and it's live with MMTs here and now, so let us not be in denial of this one. This one here was at $105 on the bid. When we took our entry at $110.50, we had a markdown of $303. How do you like me now? The last close was $413. Listen, you go find this in whatever auction service you go. You bring the professionals in here. I'll show you how to make money. I'll show you how to make money. at wholesale. And what a market maker does, you can take your day trading, all your philosophy about earnings and all of that. It's about price. It's about discount. It's about directional changes and how do I get good. And when, I mean, it's 303, that's $30,000. That's a 2405. It's way in the money. 413, that's a $303 markdown. Okay? Okay? And we're doing the best that we can. Not only that, you can take a look at other contracts, 2315 put. You don't have the big markdown in these things. They're $88. Why would I want to buy one of these when I'm making all the big markdown savings for lower dollar cost risk entry? Why? Tell me why. So that's my point. So there is also a wonderful contract. Once again, this one here, we did the 2195 also. That was an $86 markdown, and our print was $39.30. They'll take a while, but as the markets do pull back and correct, because of the amount of premium that was taken out of here that we created, you can't help but go up. And I'm going to conclude Nasdaq 100 market making discount skills and everything that this market making division does at stock market funding. And I've got the proof, and it's here, and it's live, and all these transactions are here and now. Go find that on the internet. Learn how to get the risk out. That's $8,600 per contract. If you're buying 10 of these, then you're saving $86,000 on the entry. Wholesale, you're taking out the risk. Once again, it's about taking out the risk.